Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. The two bullish Andrews seen here, the original late March to early July action and the more recent early July to mid-September one, both these are crucial in running this market and to the bullish incentive. In the original late March to early July pitchfork, the middle time, currently 266.5, had shown back in August how good a resistance it was. Then in mid-September, the lower time, currently 257.75, of the newer early July to mid-September pitchfork started taking on some of the heavy lifting and showed the more recent and more acute bullish angle of attack. Now admittedly we had one close below it and another later close right on it, but no two consecutive closes below, which is important, or was important, as you no doubt are aware, that because of the way that it's done. Anyway, that led to Thursday last week having a matching high to the one in August, and higher highs since then with one bearish interaction, which was immediately counteracted during this past week. Prices are now testing, with an initial rejection today on Friday, some congestion at 267 to 269.5 area. Now support below is layered, but the more recent and somewhat wide zone between 250.5 and 242 even seems to be the best at the moment, outside the pitchfork times. This all has now prompted me to think about the August to September period being a possible hesitation area in a possible larger July to date, well, possible bullish halfway hesitation. Now I know that is a huge ask to think about, and I hope you will think about it, that is. I for one will certainly keep considering it, but just in case, I've labelled a possible target X for such a pattern up off the top of the chart, the daily chart, in the 288.5 area. That is all I'm saying on that right now. Now one final thing to remember, and it is paramount, and something I've been repeating again and again. Please continue to remember the bullish March to July Andrews pitchfork is still very much intact, and until that is broken, redesigned or reassigned, then it will rule the overall bullish incentive here. London UK feed wheat. So since the market peaked up earlier over the flatlining long moving average, currently at 196 even back in August, and failed to make a single close up over it at the time, prices had dropped away down to the lesser Fibonacci levels at 183.45, 182.20 and 181.60. 4 weeks ago prices stabilized there, just under the short medium moving average, currently 190.70, and then 3 weeks ago they started to rise again. Now the rise was somewhat spectacular and uncalled for, as the market moving up made 3 gaps within 2 weeks and still continues to move higher, up through the then slowly declining medium moving average, currently 188.60, and 2 weeks ago up over the long moving average properly this time. Prices late last week and early this week, past week, hesitated a little before a strong kick upwards made on Wednesday, with an immediate countering key reversal up, just, combined with a bullish engulfing pattern that pushed prices to new highs on Thursday and Friday. Now admittedly, Thursday looked suspiciously like a shooting star pattern, type 1 bearish, and Friday looked even more worrisome as a possible gravestone doji, though it's not really that much as such, but they are nevertheless new recent highs. This concerning action I highlighted last week when I said about prices, and I quote, and are now seemingly stalling a little as we approach the March 2013 high at 205.05, end of quote. However, I also said immediately after that, and I quote, all this action has allowed me to draw a July to September bullish Andrews pitchfork, and it is the lower time of this pitchfork, that's currently at 197.95, that has recently shown the bullish angle of attack. Thus the middle time above which is currently 214.5, is the main rising bullish resistance beyond the March 2013 high. It is, as I've said elsewhere, until this bullish Andrews pitchfork is broken, changed to a bullish pitchfork, a shift pitchfork, or reassigned and retired into something else, then it will drive the bullish incentive higher in this market still. One final thing to add, and that's the end of the quote. One final thing to add, and I've expressed this elsewhere in some other grain markets that have shown the similar aptitude. If we look at the August to September action as a possible hesitation, then we could also look at the July to date action as a possible bullish halfway hesitation type pattern. Now, with this in mind, I've placed a prospective target X in the 213.15 area above. This is not an insurmountable target as elsewhere, but let's not kid ourselves, it is still a big ask. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.